Good morning. This is Larry McMillan with a stock market update on Monday, May 13th. So this rally is continuing higher. We're nearing the all-time highs. And in the past, it's been a pretty good idea to buy straddles when the market nears an all-time high because either it breaks on through and continues, quickly higher, making the call side of the straddle very profitable, or if it falls back, that can cause some consternation amongst traders, and they'll sell the market off pretty sharply, and that could make the put side of the straddle profitable. So that's one strategy we're looking at right now. I'll go over the indicators. We have a mixture of things. Some indicators that have recently given buy signals are already ready to exit those buy signals, and then we have other new potential indicators setting up. The S&P is near its all-time high, so there's resistance at that level at 5260. Pulling back from here, there's some minor support levels all the way down to where a gap would be filled on the chart at 5070. So if it closed below 5070, that would be negative. If it closed above 5260, that would be positive. The equity-only put-call ratios are a split. The standard ratio is on a buy signal. The weighted ratio looks like it's on a buy signal, but the computer analysis programs that we use to gauge these charts is still saying that that one's still on a sell signal, at least for now. The McMillan volatility band buy signal is in effect. If S&P trades at 5275 or higher, though, that will be the target for this move on the McMillan volatility band buy signal, and then we would be exiting that position. The breadth of the market has still remained fairly strong, and the breadth oscillators are on buy signals. They could probably withstand a day or two of negativity, negative breadth, but much more than that, then those would be rolling over to sell signals. So it doesn't seem like that's going to happen right away, but breadth is a very flighty indicator. It can change very quickly. New highs versus new lows, that's still very solidly in the bullish camp. New highs are dominating new lows, and so that buy signal is in effect, at least for a while. So it brings us to VIX. Now, VIX has fallen all the way back in below 13, so it's definitely in overbought territory, but it doesn't really give a sell signal until it starts to go higher. In fact, we have a VIX spike peak buy signal in place. It's been in place since mid-April. That will remain in place until mid-May. It would exit if a VIX started to jump at least 3 points higher from these levels. But right now, the VIX picture is positive. Also, the construct of volatility derivatives, that remains positive as well. The term structure of the VIX future slopes upwards, and all is well in that area. We a while back had mentioned that cumulative volume breadth had made a new all-time high, and that usually indicates that S&P will do the same. So S&P is almost about to do the same. So any positions bought in line with that buy signal would be sold if S&P gets to a new high. So overall, we're trading the signals as they appear. And I do suggest adding a new straddle at this point in time. Meanwhile, we will follow all of our indicators closely. They have good track records, and we don't want to really mess with that. So I invite you to visit our website, take a look at the daily letters where we keep track of these things, daily. And otherwise, have a great week trading.